Maximize your yields while spreading out your workload with the earliest maturing winter cereal. Visit kws.com/CA to see how our hybrid rye varieties can work for you. High yields, high quality, high value for your farm. KWS, seeding the future since 1856.
Well, let's lead off today's show talking about the markets, and there's lots happening. I like how I've seen a little bit of a bump in corn. We'll see what that means for those of us that are trying to move some inventory, maybe some 23 and 24. Joining us right now is Steve Nicholson. He is with Rabobank. Steve, how's it going?
Good, Sean. Good to see you as always. Good to talk to. Yes, as we talked a little bit before we started recording, what could possibly go wrong at this point as we go forward here?
Yeah, so we have seen a bit of a lift here.
Yeah.
How do we interpret it?
Yeah, I think we have to be very cautious about interpreting this as a rally into harvest or something like that. And I say that for a couple of reasons. One is this is, we're in the middle of the growing season. Weather has an impact, and the markets have basically taken all the risk out. And so anything that comes back in that looks like could be a risk, the market's going to have to think about that and reprice that in. And I think that's what you're seeing here a little bit. I want to come back to that in a minute. The other kind of put in parentheses in the middle of this is that you have, the money folks. The funds are very, very short. All these markets are net short positions. And so they see a little bit of situation. This is going to shake those shorts out or chase those shorts out a little bit. And so you're going to see a bit of lift in the market. But I think you have to, as a producer, and you framed it very well, people have some 23 crop they have to move. They probably need to do some pricing of 24 crop. I'm sure people are not fully priced on 24 crop yet. And I think you have to reward these rallies. And we've said this basically since last spring or last winter, is on these rallies, you need to reward this and move on and not think about, could it go higher? Now, this is probably a bit of a stretch, but if these rallies put you in a position where you can market that crop and lock in a good, a positive margin, then you need to move it and move on, because you've got as I saw in Saskatchewan last week, and you see here on the other side of the border, you've got a big corn crop on the way right now. You've got a good canola crop, a good wheat crop, a good barley crop coming on there in Canada, and a potentially good soybean crop coming on here in the States. We have more acres. You've got a lot of supply potentially coming to the market here within the next 60 days.
Yeah, and I know there are some struggles in certain parts of Canada and the US, but overall, this market is dealing with a supply issue. I heard last week a market analyst said to me, farmers are just too good at their job.
Well, I mean, there's some truth to that. Farmers are very good at what they do, but you're right. And we shouldn't diminish those areas, whether it's in Canada or whether it's in the US, that they've had too much rain, they've had too much wind, or they've had some hail. And so they're not going to have a great crop. But when you look at the overall condition of the crop and you start lining up now, as we always used to say, you kind of go down the list. Did you get it planted on time? Yes, check that box. Did it emerge? Yes, check that box. How's the weather been? Fairly benign, so you can check that box. In the case of corn, you're now likely at least 2/3, if not more, through pollination, and so that looks like that you check that box, and so you've got a supply issue, and farmers are bred to produce. That's what they want to do, and that's what's going to happen this year. We're going to see a good crop, and Mother Nature's cooperate as well.
Well, you got to kind of look at the probabilities, right? If you look at December corn, you and I are having this conversation right now. It's trading at 421 on D's. Okay.
Yep.
What's a higher probability? 450 or 350?
Right.
And we're closer to 450, but I don't know. It seems like we got a lot more downside risk based on some of the things that people like yourself are telling me.
Yeah, and I think that's exactly what you have to look at. Where is your upside risk and where's your downside risk? And and Deese has told you that, really. It's gone to 450 this year. We'll put it in those round numbers.
Yep.
And I'm just going to look at a chart while we're talking here. Yeah. So have you seen a high of around $5 by 5.10, but the chances of it going there, and you see the most recent high is around 440. Okay. And you've also seen the lowest low has been around 390. So you just look at that range that we've been in, and we're closer to the 440 than we are to the 390 at the moment. So this is an opportunity. And to your point, you look at the supply side, your downside risk is you have more opportunity there than you do on the upside, and you have to reward that rally for sure.
Yeah. And one of the reasons I want to bring you on today, because Rabobank's got connections all around the world. We focus a lot at this time of the year during the growing season on supply, and we've covered that now. Let's talk about demand. What are you hearing, and what is your forecast? Can the demand surprise us? Because we can look out our window and get an idea surprising up and down on the yield standpoint, but what about demand?
Yeah, and I think we have to. This is a bit of a nuanced discussion, and I want to kind of come back. Let's look at the last several years first, because before we got into the supply side is overwhelming markets. It's like, oh, demand's horrible, it's soft, it's we're going to zero, and all these sorts of things. And I always want to take people back and say, okay, if you look at corn, wheat, and soybean demand globally, the domestic demand. I went back to 1970s, sorry. Went all the way back to the 70s and looked at that demand. Now, my econometrics professor would cringe at this, but you could almost draw a straight line from that 1970 number all the way up to today, and it's a straight line going up. And so demand is not soft. In that time, we've had 5 times where we've had year-over-year decrease in demand. The biggest being 1974 was 3.5%. But everything after that has been less than 1% demand. So demand is not soft and it's not going away. So I want to give that little history lesson. But what you have seen is we don't have any supply shocks. And when we get a supply shock, the buyer's going, he or she goes, oh my gosh, I'm not able to get what I want. And so we bring demand forward so it looks like really robust demand. But now you have supply is adequate, and we've seen stocks growing of both corn and soybeans. Wheat's been a little bit more problematic in the world, and kind of oilseeds in general. And so that demand side looks like it's soft, but really the reality is in the aggregate, it's going to grow year over year. It's going to be more hand to mouth. And so, I think we have to think about that, in that broad context. But having said that, to go back to a more specific question, Asia is to continue going to be a good demander of grains and oilseeds. Now China, of course, has had a bit of a soft economy. You have to worry about that a little bit, but you're still feeding 1.4 billion people every day out 3 times a day there. But you also have to look at India, and you also look at Southeast Asia. Those are areas that are growing. They have more money in their pocket. They have more income, if you want to put it that way as well. And so that demand from those parts of the world will continue to grow and be good customers for those of us here in North America. Now, there's obviously more competition for us here in North America to move our crops because you have South America always there, Europe. But the fact is, you've got some pockets, particularly on the wheat side, where you're going to have close to 15 to 20 million metric tons of less production across Europe and Asia, Russia in particular, that won't be available, which is going to have to find a home, or is going to have to find those importers have to find a home or a seller someplace, which means they'll likely come here back to North America. So I am not worried about the demand side. Now, there are particular issues if you look over the medium to longer term that you have to worry about. But I think, you think about where we are today and tomorrow and next year and the year after, the demand will be there, particularly at lower prices. It's a long answer.
Yeah, no, that's good. I pulled up a December spring wheat chart.
Oh, sure.
Okay, and I just got what a roller coaster, and a crop that clearly can't figure out what it wants to be when it grows up this year. We're sideways trading to the 3rd week of April. Then I can remember doing interviews with market analysts about that. Do we really want wheat to be leading the market higher, which it was, right? We almost get to $8, and then it makes the decision. You know what? Let's go to 6. and it bombs lower, does a little bit of a bounce, bombs lower again. It almost it pretty looks like it does trade a little bit below $6, and now
Yep.
we're 634 and change. So what is going on with spring wheat?
Yeah, I think and I'm going to put spring wheat to me is always a mystery because I agree with you. This is a crop that there's not many places in the world that produce, you know, spring wheat, um, and produce this sort of quality of spring wheat. And so, there's not a big pocket, there's not a big bushel basket full of it around the globe. So you kind of sit there scratching your head and says, why is Minneapolis wheat going through the tube when you got not many people making, hard red spring and winter wheat around the world?
Yeah.
But I do think, unfortunately, what happened with wheat was, and the fundamentals absolutely supported your premise of your question. I don't for any wheat crop because you had relatively low stocks, but you did see several things that caused wheat to have this dive of $2 basically in spring wheat. Was you had a corn market that was sick and continued to get sicker, and so you saw it go down. You then had, you had issues in Russia, but Russia, keep in mind before this was just dumping wheat on the world market, and the world is like, it doesn't look like they're ever going to stop. And then you had the U.S. winter wheat crop continue to get bigger, and that's still the case today. And so, and at that time too, the market was like, the wheat crop around the world looks pretty good. And so, people thought, well, we're going to be fine. We don't need to put a premium here in the wheat market. Now, we found differently once we got here is that, yes, the U.S. winter wheat crop is getting bigger. The European, the Ukrainian, the Russian crop was getting smaller. The Australian crop was basically flat. I mean, it was average. It was a good average crop. It wasn't what they had the last 3 years. And the fact is, there were some expectations that we would see a little bit of a bump up in stocks, which isn't really materializing when you look at the global market right now. But, when I look at spring wheat, you're like, I agree with you. It's like the wheat market, still the fundamentals are still relatively favorable to be supported to prices. But if you can't get corn price to have any sort of life about it, it's going to be very difficult to support wheat prices going forward, unfortunately, because you have this, and not that you should be feeding spring wheat, but then you have, not necessarily in our part of the world, but other parts of the world, that wheat feeds into a feed ration.
That's why we always start with corn because
Yeah.
we need corn to lead. If we're going to go higher, we need
Yep. That's right.
corn to lead that charge, right or wrong, indifferent. I don't care if you don't have corn within 50 miles of your farm or 500 miles of your farm. You need to be watching that corn future because that's the indicator.
Right. That's exactly right. And I come from Iowa, which is a corn state, so I'm glad about that. But
You're wearing your
mostly
corn pajamas at night.
exactly, I wear my corn pajamas and my corn hat going to bed at night. Exactly. But the fact is that corn is the lead of the complex, and rarely does it give up that lead. And so it leads everybody down, it leads everybody up. And I said the same thing last winter. I said we could be the leader of the complex here just because of the fundamentals. And it did do that for a bit, but it didn't do it for very long. And I think it's a reminder again that, because corn fits into so many pockets, it fits into the food chain, it fits into the feed chain, it fits into the biofuel chain, and also just the sheer volume and the liquidity of that market is what leads all the other markets up and down. And so, yeah.
Hey, Steve, is there an election trade here? Is because that's a factor. But
Yeah.
we've got tough China talking policies happening right now in this
Yeah.
U.S. election. China's a
Yeah.
big buyer of commodities. Is there some election risks that we need to be aware of when we're thinking about our crop marketing plan for this year?
Yeah. I'm going to be a smart aleck for a minute. I said anything I say today will change next week because we've had so much happen in 2 weeks. It's like,
No
what
kidding.
else? Yeah. So I need to pay that disclaimer up front. But I do think it's a valid question, something producers and traders need to be thinking about. Also, keep in mind there's a lot of protectionist talk around the world and a lot of protectionist trade moves around the globe. And you're also having 64 elections around the globe this year, which is unprecedented time. So you have a lot of rhetoric, and once you get past the election, some of that rhetoric fades in the background. I'll use a couple examples. India, Modi was all over this, and rice. We're gonna ban rice exports, or they pulled back on rice exports a year ago. We're gonna do the same thing with wheat, and now the election's over. Well, we've lifted the rice export bans, and a much different attitude. Same thing think about Mexican corn. Well, we're not gonna take a GMO corn. Well, that talk's kind of faded in the background now that their election's over. So I think you need to think that in mind. But from a U.S. perspective, I think we have to be a little bit concerned about who gets elected. Trump has been very clear about, I'm going to add 10% tariffs to everything we import. I'm going to put 60% tariffs on China. And, he hadn't said anything about, well, they might retaliate. Well, we know they were going to retaliate because they did in 17 and 18, and U.S. farmers have had to suffer through that. And we're still sort of suffering through that hangover, if you have it. But I think, when I look at it from an agricultural perspective and all the protectionist movements, all the bilateral, trilateral trade agreements, that doesn't help agriculture. Agriculture thrives in a more free trade agreement where everybody participates with the same rules. And when you have multiple different sets of rules across the globe, that makes it much more difficult for anybody, but particularly agriculture, because we have a fungible commodity that needs to move. And so I'm concerned about that. My hope is that once we get past the election rhetoric, that maybe we can get back a little more pragmatic here and really think about, okay, what are the issues we need to address, and let's talk about them rather than to use a blunt instrument like tariffs. And at the same time, the Biden administration, agriculture will tell you, has been a little disappointed in not addressing trade issues.
Yep.
So hopefully we can get over that after the election and move forward.
Steve, this has been fantastic. It's always great to chat with you. Thanks so much.
Yeah. Great questions. It is great to chat with you, and it is a fascinating time, as always, to be in agriculture and markets, for sure.
Yeah, it's not getting any easier to market your crop. That is, we've got that part figured out indeed. That is Steve Nicholson.
Yes.
He is with Rabobank.